Welcome to Find Your Next Six-Figure Infill Deal for Friday, March 20th, 2026. This week we have a couple of special deals. The main one, our deal of the week, is a Cottage Village. This is the first time that we've actually presented a Cottage Village. 2 weeks ago, we actually did have a deal of the week that could be a Cottage Village, and that one sold, and we are going to develop it into a Cottage Village. But this one, we are underwriting it from the beginning as a Cottage Village, so it's pretty exciting. And then we'll have a couple other deals that we go into, and some other deals that are currently still on the market. So we're gonna get started. Just cover a little bit of background on myself, and then cover the details of how these deals work, and how you can get access to our list. So first things first, a little bit about me. My name is Zach Matson. I'm a developer and builder here in Boise, Idaho. I got started back in 2013 with my real estate journey by house hacking. I bought a duplex. I lived in one side, rented out the other while I fixed up my side. I did that again a little less than 2 years later in 2015 before getting into full-time flipping in 2016. And then I transitioned into development in 2020. So I've kind of been constantly focusing on growing and improving. When I was flipping houses, I had a hard time scaling. So I saw the opportunity in infill development with the ability to scale up to where I had wanted to be. And so we started doing infill development bought my first property in 2019, developed it in 2020 through 2022, bought a few more properties in that time frame as well. And then 2023 and 2023 and 2024 focused on scaling up. And then last year, I basically saw a ton of opportunity on the market that I realized people just didn't really understand development. And it's kind of a high bar to get into as far as knowing what you can do with properties, and just a lot of development. It's just there's a high bar both in knowledge, and then also it doesn't have the same financing and education around it as a lot of various forms of real estate. So I saw an opportunity to kind of a win-win situation where I could present deals to individual investors, and it would also bring in income for my home building and development company. So I still do my own deals, but then I also did this so that we could bring in consistent revenue. And so that's how this got started towards the beginning of last year is when I put the system together, and then that's kind of improved since then, but we launched it in July. And then since then, we've been kind of gaining steam. We have a few deals that we're helping clients with currently, and more deals are getting done every week. So a little bit of details on our infill deal list and how to get access to it. So we have our deal of the week every week that we send out to our mail list, but we also have our exclusive access to our infill deal list. And that's for the people that kind of go through our system and then they can get full-time access. So they get the first dibs on any properties that get added to the list. They can see the properties getting added the day that they're getting added and underwritten. So as this gets more and more popular, I think that's going to be more key, because people are going to see deals right off the bat and get them under contract right away. But a couple of details on this. So we work with both realtors and individual investors. So we have a realtor partner program where we basically partner with realtors where they can present these deals to their own buyers list and co-brand with us. And then the only thing that we require of those realtors is that they go through some training. So because infill development is different than just going out and buying a regular house, we want to make sure that our realtor partners understand the process better. And also, so number one is understanding development, but also understanding our home building process, and then also kind of how we're analyzing deals and how to present that to their buyers and investors. So we have two training sessions, I guess 3 training sessions. Part 1 is on infill development and our process, and then part 2 covers our building process. So we do those occasionally live at title companies or at brokerages, but then we also have those recorded, so you can just watch the recordings. And then we also have a recorded Zoom session where we cover the details of the list and how to understand it when you're looking at it. Now we have actually changed some things on the list since we first recorded that, so we'll probably in the next couple of months be recording a new one. Nothing major that you can't figure it out, especially as if you watch these replays, but it'll be key to update it, I think, and some of the other training as well. Then we just have you sign an agreement stating that if you're going to use our strategies that we're suggesting with buyers, that you're going to introduce us to your buyers early on in the process. And that's really just so that we can get a relationship going and get that trust going, number one. But number two is that once you get a deal under contract, we want to be, in the loop from day one or even before you get it under contract. And that helps us run our full system, which we'll cover here in a little bit. But it basically assures that we can do the things that we need to do to make sure that we can back up our deals with our guarantee, which we'll also cover. And then if you're an individual investor, so we just kind of have you do the same thing. We have you go through the 3-part training series that's geared towards investors. We also make sure that you have a signed buyer's representative agreement with a sponsoring realtor. So if you don't already have your own realtor, we can refer you to one of our realtor partners that's been through the training. If you do currently have a realtor that you're working with, you can still bring them on to the system. We just require that they go through the same steps. So they just need to do that. And then that way everybody's on the same page and we can figure out how to get the deals done and represent you the best. And then the last thing that we have you do is just have you sign an NDA, basically, and an agreement stating that if you're going to use our system, that you're going to use our services. So we don't charge an arm and a leg for anything. We charge basically market rates. We just want to make sure that ultimately big reason why we're doing this is on top of helping individual investors gain access to some of the infill systems, but it's also to bring business and revenue for my company. And then a few of the ways we get paid regarding that. So obviously I'm a developer and builder, so we charge our general contracting fee for the horizontal and vertical. And then the other thing that we do, so we put together this system and this list, and we spend a considerable amount of time both underwriting deals up front, but also during the due diligence phase, we have like a 150-point checklist of things that we go through with due diligence. It's much more involved than standard due diligence on a home purchase. And so in order to cover our time and costs on that, we just charge a consulting fee at the purchase of the home. So that's outside of your realtor commissions. We just charge a consulting fee. It's a flat rate depending on how many units or what the deal is. So we'll cover that later as well, or once you get a deal under contract, we'll cover it more. But we essentially we charge a $15,000 consulting fee for a lot split up to 4 units. And then we do a $25,000 subdivision fee if it's between 5 and 10 units. And then anything more than 10, we charge that subdivision fee and then $2,000 on top of each for each unit on top of that. And then so we're also fully vertically integrated. So when I put this together, I realized it was important that we could analyze and control the process from start to finish, from basically the finding the deals and underwriting all the way through entitlements, all the way through development and building. It's something that we've done for years, ever since since I've gotten into development. But essentially, I just realized it was important to be able to control that process flow the whole time. Number one, to make sure the deal is written for your goals. I see deals all the time where they're piecemealed together by different parties, and they don't always have the same end goal in mind. So something gets put together, and then when it's all said and done, it's not very profitable because it wasn't geared to be as profitable as it could be from the very start. So I'll cover, probably some details on that as we go through the call and what we do with that. But yeah, so we do the entitlements. We just charge an hourly rate for the entitlements management on that. So we get the applications ready and everything, and then get it submitted. And then we also are the go between all the agencies, the government agencies and the professionals. We still hire the third-party professionals. We just manage all that process and make sure everything is moving along at the timeline that we need. Okay, so details of our deal. So we actually offer not only do we have this infill deal list, but part of why I created this system is that I realize that most investors don't know anything about development, even if they want to. It's hard to find information out there. And then when you don't have information or you don't understand how something works, sometimes it's hard to invest in something because if you don't have the knowledge and don't understand how the inner workings of something. So the reason why I created this was I realized that investors are going to be worried about losing money on a bad deal or not knowing the process, projects dragging on too long, or contractors cutting corners. And then the big thing with this that's different than pretty much anything else that most people do as far as investing in deals like this is just not having control or visibility. So in this system, you actually buy the deal, so you own the property outright. You're not investing in somebody else's deal. So it's not a syndication where you're investing, 100,000 into somebody else's deal and it's part of, a $5 million raise or whatever it is. You own it outright. So you're buying the property and then we're just doing all the heavy lifting and you get to make all the big decisions. Ultimately, you're deciding how the project is going to go. We're going to gear it towards whatever your investment strategy and goals are from the very beginning. So we're going to start with the end in mind, and then we're going to work backwards and make sure that we design the project to be the most profitable as possible. So the core components of what we do, so number one is our expert deal underwriting. So we vet, analyze, and underwrite every infill deal on our list. So everything on our infill deal list, if it has the underwriting with it, so that's a high level underwriting. So we understand the costs of development and building. So it's usually pretty accurate. But then once we get something under contract, we're going to get a lot more into the nitty gritty and the actual details on the costs and everything. But it's usually pretty close, that high level analysis. If the high level analysis looks good, 95% of the time, the deal looks really good when it's all said and done. So we're not just estimating numbers, we're doing these deals ourselves. So we have active projects that we know the costs on. Number two is we're going to offer negotiation support. So we guide you and your realtor on how to structure and present offers. So again, these deals are different than just going out and buying a regular house. When you buy a regular house, you typically have a 5-day due diligence period. You hire an inspector to go inspect the house, and then you make sure that the inspection looks good. And then after that, there's not a whole lot unless there's funky things that come up in the CC&Rs or property line or property description or something like that. But our due diligence is much more in depth. As I mentioned before, it's about 150 points. So that takes us several days, sometimes weeks to work through in order to get communication from certain agencies. And we walk through that step by step. So the third part of this is we don't just give you that list and say, find out all these answers. We actually do 90 to 95% of it. So you're responsible for a few things, like if you're doing financing and if you're renting the existing house, if there's an existing house on the property. So there's a few things that you have to do just standard with any other home purchase. All the entitlements due diligence we do for you, and then we share that document with you so you can actually follow along the process and see what issues we run into, how the deal changes over due diligence, that kind of thing. Number four is because we're general contractors, so we can renovate the existing house if there's an existing house on the property that needs work. A lot of these deals that we present have existing houses. Some of them are land, but a lot of them have existing houses. And so how that works, about half of them need renovation, maybe a little bit less than half. So we can renovate the existing house, and then you can rent it out from there or live in it or whatever. And then we do the entitlement management. So this is where that vertically integrated kind of comes into play even further. So we go through the entitlements for you, and you just follow along with that. And then we do the horizontal and the vertical construction. So that's two separate phases. Horizontal is all the utilities and putting in roads, sidewalks, all that fun stuff, anything that's at ground level or below. And then vertical construction is when you start the foundations and going vertical. Some of the bonus things that we give you, so when you sign up with your email, we send you our ultimate guide, Introduction to Infill Development. That goes over just a lot of details of infill development, kind of explains our system a little bit. And then number two is we're going to give you our due diligence checklist. So once you have a property under contract, we're going to share that due diligence checklist with you so you can follow along. And then at the end or before the end of due diligence, we're going to provide you with our one-page underwriting worksheet. And that's what we base our guarantee on. So we actually offer a profit guarantee, which we'll cover here in a minute. But this final underwriting worksheet acts as your final go or no-go on the underwriting for you to base your final investment decision on. So basically, it's going to show you, what the projected profits are, what the timelines, the costs associated, all that fun stuff. And then at the end of the project, we're going to compare our results with the original guaranteed underwriting worksheet. So number four, so once we start entitlements, we're going to give you our entitlements process checklist with projected timelines. So again, you can kind of follow along the process and make sure that everything's following along with how we anticipated. And then number five is we're going to give you our complete construction process and inspection checklist. So once we're under construction, we're going to give you that checklist that covers all the things that we inspect as we are under construction. And then on top of that, we actually hire third-party inspectors to go inspect homes at 4 key phases. So the first phase is at framing and rough-ins. So basically behind the walls, we're actually going to send in an inspector and go in and inspect. And so that's going to uncover any issues that normally would get buried by other builders. So you can see what's actually happening behind the walls and if there was any mistakes made, where and how they get corrected. And then number two is we're going to do it at drywall. And then the third point is at interior and exterior finishes, and then our final inspection. And then sometimes that final inspection is actually 2 separate reports because at the very end, sometimes we'll have a final punch list after with some just minor touch-up stuff, and then we'll get that final report after everything is finished. You make sure that you're getting a perfect house. And then on top of all this, we're going to do a monthly progress call. So it's going to be the last Friday of every month. So we have our call next Friday. It's going to be right after this call, but it'll be a separate link. So you'll get that link in your email as well. But that's going to be our deal list review. So we're going to cover or review all the projects that we have currently under or currently going through development. So it's going to be at different stages for entitlements, development, vertical construction. So we're going to do that on a monthly basis, cover the details of those deals, what progress was made from the previous month, and then also any kind of issues we ran into and how we overcame them. And then the last 2 offers here are the big ones. So number one is we're going to have our entitlements guarantee. And so what that is, so we guarantee that if we don't achieve the unit count that we underwrite, we waive our next fee or apply it towards the development costs. So for example, on this deal this week, we have a 15-unit cottage village. And so if we get through to the end of the end of due diligence, and we can only do 14 cottages, and we guaranteed 15, we actually, whatever we charged you for our fee, our consultation fee, we waive that on the next project if you're buying another project, or if it's rolling into development, we're going to apply it towards those development costs. And then bonus offer number 9. So this is the big one, our underwriting guarantee. This is our profit guarantee. So we actually developed this with the understanding that people aren't going to be comfortable, investors aren't going to be comfortable investing in something unless they have a reasonable assurance of what can happen and the profit that they're going to make. So we put our skin in the game as well. So we guarantee that if the project doesn't meet at least 100% of the projected profit at the final underwriting, we're going to refund you until it does. and that's up to 50,000 per deal, up to 2 lots. Anything more than 2 lots, we do 20,000 per home, and that's up to a total of 200,000. So for example, this deal this week is our Cottage Village. It's 15 units. So this is a little bit, I'd say this is a medium-sized deal. So instead of doing the 50,000, we actually guarantee it up to 200,000. So it's 20,000 per home or max of 200,000, but we're actually guaranteeing, well, we haven't come to the guarantee yet, but we're projecting right now. It might change, it might go up or a little bit down during due diligence, but we're projecting that it's going to make about 610,000. So if we're all said and done at the end of underwriting, we say it is going to make 600,000. We're going to back that up with a $200,000 profit guarantee. So if for some reason the deal finishes up and you only made 500,000, well, we're going to hold off that 200,000 off to the side and then kick back the 100,000 to make sure that you made your full 600,000. And then and same thing, like if it only made 400,000. Now, if it did way worse than we anticipated and only made 350,000, we still kick that 200,000 in, but now you only made 550. So it's not risk-free, but it de-risks the deal significantly for you and puts our skin in the game where we're not making our profits unless you're making what we told you were going to make. All right, without further ado, we're going to cover the deal of the week, and then we'll cover a couple other deals as well. Let me pull up my share screen. Okay, this week's deal is in the West Bench, and it is located at 4403 North Maple Grove Road. So what's kind of interesting about this deal, so I saw it come on the market, I think just late last night. And what's interesting is the seller actually has it listed as apartments. So it's like it's 7 apartments. Well, I know just from underwriting a ton of deals and analyzing, hundreds, if not thousands of deals last year, that apartments right now do not pencil very well, particularly anything in the commercial space. It's hard to make pencil. Even if you get the land for free, it's hard to build them and refinance into long-term debt with where the interest rates are now. So with where construction costs and interest rates are right now, it's hard to make those pencil. They pencil a little bit better for like, up to 4 units where you're not in the commercial space. But once you get into commercial apartments, they don't pencil very well. So I knew looking at this when I first looked at it, that it's going to be tough to pencil as an apartment, a 7-unit apartment. But what I realized is that it sits on an acre and I actually have a few of these same type of deals right now. That one we have under contract with the seller and client. Another partnership I'm looking at, and then another one I have an LOI out on. But just analyzing a few of these deals, I understood kind of right away what I could do with it. And so this one, we'll get into the location here in a second, but it's right above Garden City, right near Glenwood. So pretty good location there in the West Bench. It's right on Maple Grove Road, just north of Ustick. And then, so it's zoned R1C currently, and that's how it would stay as well. The great thing is this purchase price is like really not too bad. So 550 for a 4-bedroom, 3-bath, about 3,100 square foot existing house sits on the property. It is being rented right now. I haven't heard what the rental rate is, but it is currently being rented. And then so a couple things with this too. So since there's an existing house on the property, now I haven't toured it. We'll tour it if it gets under contract, but it's kind of unnecessary at this point, at this stage. But we can go look at it and determine if this is like what the true value is, or if it's. I looked at it; it's probably worth a little bit less. But this number here, this down payment amount, is based on if you get a lender. So we know the lender that'll lend on stuff like this at 40% down. So that's how we underwrote this deal. But you could theoretically actually get an investment property loan or even an owner occupied loan for less money down. Now that does, I'll get into like how that changes over time, but essentially you could buy this with less money down. So anywhere from your 3.5 to 20% down with or 25% down with an investment property loan, and significantly reduce this number. But this number is with $220,000 down. And then because it's a cottage village, so there's carve outs in the new zoning code with Boise where you actually, because you're not subdividing, you are actually uh, uh, it's all one parcel still. So you basically condominiumize the development and then you sell them individually, but you're not subdividing. So you don't have to put in all the infrastructure and then get the plat signed and then go vertical. So we can actually do the infrastructure and the vertical at the same time. With this many units, I'd probably do them in phases or stagger the build just so we're not flooding the market too much. But yeah, the total timeline on this is usually about a year less than what a typical development is. So if you look at the returns here, about 610,000, so 185% ROI over 2.5 years. This is kind of ridiculous numbers. Particularly too, if you could reduce this cost by using a different type of loan, but you may have to pay more cash down the road. So we'll get into that. And then this, how we underwrite this as well. So this is if you sell that are, well, once you can't, on this one, you can't really sell the original house. Well, I'm going to cover that here as well, but you can't really cover the existing house, but this is the equity that you would have in the deal at the end. And then if you sell all but one of the units, this is the cash that you get back. And then, so you keep one unit for free, you get $572,000 back, you have 330 into it. So you actually made $243,000 on your 330. So you get your 330 back, plus you made 243,000, which on any investment, that would be a great return anyway. And now you also have a cottage for free. So not only do you get this great return here, but you also have a cottage for free out of the deal. And then the other thing you could do too, we underwrite this with that scenario, but you could also, just maximize your leverage. Maybe you refinance the cottages at, 75% loan to value. So you're breaking even on rents, but then you retain as many as possible. So that, that probably looks like you keep, a half dozen or so of them. And then over time, that's going to be a great investment as well. We also underwrite this as, so now that you keep it free and clear, this is what we would anticipate the annual insurance to be, your property tax. These are just estimates. And then this is so normally this is your housing payment or your mortgage payment, but since there's no mortgage, these payments divide over 12 months. And then what your new construction rents would be in that area, and then your cash flow. Now, if you have it professionally managed, you can expect to pay this roughly. This is also setting aside money for CapEx, even though you won't have, with new construction, you don't have CapEx or significant CapEx charges typically for, at least 8 or so years. But then this is your true cash flow if you have it professionally managed. This is what the numbers look like as an Airbnb. So I just typed in the numbers into AirDNA. Again, with the Airbnb or AirDNA, they're comparing all Airbnb properties. Typically if it's new construction, you can design it in a way to maximize the profitability. So this number will typically look better with new construction, but we just go off of those AirDNA numbers. And then we have a site plan of 15 houses. I'm going to share that here in a minute once we cover the rest of the numbers here. So that existing house. So even though there's an existing house on the property, when we go to develop this, we're gonna use an incentive called adaptive reuse. And what that is basically you keep the existing house as is, or you can fix it up or whatever, but you can't actually go and resell it. So you basically have to use it as part of the development. Now there's some different caveats with that. I'm not going to get into. That'll be during due diligence, but essentially, if you keep that existing house, you can build around it, and then the incentive is that you don't have a maximum density on the property. So now instead of doing 12 units maximum on this property, you can actually fit the most amount of units possible and still meet all the requirements, which is 15. We could probably get a little bit more creative and do more too, but I think 15 provides a great layout and provides probably the maximum profitability of this. So this is what you're paying per lot or per unit before you go vertical. This is the entitlement cost per unit, the development cost per unit. So you do still have to put infrastructure in there. You have to bring in sewer lines, water lines, all the parking spaces, all that fun stuff. And then this is the per lot cost that you could sell it for entitled, we think, or sorry, developed. Even though they're not separate lots, we think before you go vertical, you could sell them at 100,000 per unit. Now, this actually here, if you sold this at this point after sales cost, you'd actually lose money. But the big chunk of money where you're going to make is when you actually go vertical. So once we go vertical, you're paying about 205,000 to build each unit. We have some different unit counts in here, and I'll show that on the site plan as well. And then your total per unit for the land, the entitlements, the horizontal development, and the vertical. This covers all of our fees and everything, but that you're at about 300,000 per home. And then on average, these are going to sell for about 394. These are your construction loan costs on that vertical. Going back over here too on this development, this actually also covers interest costs on that development. Now in this property, this horizontal and vertical will happen at the same time. So you'll actually have some cost savings on interest there than normal. But then you have, when it's all said and done, after your sales costs and everything, your profit per unit is about 42,600. And then this is on the existing property. So this is assuming that 40% down loan and then paying, it's an interest only loan. So it's a little bit higher interest, but you're only paying interest. So this is paying it over 2 years. So the good news is you can rent this out while this property is being developed because we're keeping that existing house. Now, eventually it'll have to get vacated and then we'll remodel at the very end to turn it into a clubhouse. But this is your interest cost over those 2 years of developing. And then the rental income during that. So you lose a little bit of money during that process, unless we can get a creative way to fix it up better and rent it out as an Airbnb and narrow this gap. But that's typically on most of these development deals, you have a little bit of loss on carrying that existing house. And again, if you got like a different loan, this could be closer to break even. Just really depends. This is your total debt. If you wanted to refinance everything at the very end into long-term debt, this is the total that would be financed on top of your cash. And then this is once all but one unit is sold, this is the capital that you get back. So this is your 330 is part of this 572. So you get your 330 back plus the difference, and then you also end up with a house out of that. Okay, I'm going to stop sharing here and jump into the site plan. Oops. Okay, so this is the existing house here. This is Maple Grove Road. This is Goddard, like literally right here. So there's a crosswalk here. There's already a street sign, a light. This is where the current entrance is for this property. So we don't actually even have to do much there. We'll have to improve this, probably widen it a little bit. But there's already access. You don't have to worry about, ACHD or somebody saying you can't access there. So a lot of those issues are resolved with that. Now, not saying that stuff won't come up, but it's fairly straightforward. And then we have access here, and then all your parking. We also have where we jogged over the road a little bit and did additional parking here. Now, this is actually more than enough parking for this unit because one of the things that with cottage developments, you only need one per unit. But I find that it's typically best to have a little bit extra parking. Because especially, something like this, I think there is street parking here. I'm not 100% sure on that, but I think there's street parking along Maple Grove there. But you want to do as much internal parking as possible so that you don't have people having to park down the street or in other neighborhoods. So then we have 15 units. So this existing house it's kind of cool. It has a big wraparound deck on the back. I don't know what the internal house looks like on this. The listing doesn't show it. I'm assuming if it's rented, it's in decent condition, but either way, it's we already have the remodel budget built into all the numbers. So this would get remodeled. And What I would look at doing is adding office space in there, maybe some recording like podcast studios for content creation, probably a game room, and then like one centralized, like maybe party room where you have you keep the kitchen and living room so people can have events there. So kind of a cool all in one space where people in the community, kind of like an apartment complex, where you can kind of use this common space. And then we have 6 units in the back here. So these would be approximately 960 square feet. We would probably do 2 bedroom, 1.5 baths on this. So we do 2 bedrooms upstairs. There's 6 units here. These would be, I believe I have them as 2 bedroom, 2.5 bath, and 1,000 square feet. So each bedroom would have its own ensuite, I believe, on this one. And then these ones we could do, I think we could fit 3 bedrooms on these. These would be 2 story, but we'd have a one of the bedrooms with ensuite on the main level. So anybody that doesn't want to go up the stairs to get up to their main bedrooms, this would be a selling point for those. So we have basically 3 different floor plans that we would offer on this. So you have a little bit of a variety. And they would all be your maximum square footage on Cottage Villages is 1,000 square feet. And then we have central walkways here, so you can get over to Maple Grove. This would be required to be this sidewalk would be required to be widened and detached. So that's all part of the cost as well. And then we have a central location here where we can either put more amenities in here or just keep this as a lawn for dogs or whatever. And then we still have a big lawn out front on the side over here too. So there's some additional room on the property for additional amenities if we want to as well. But overall, pretty cool. I really love the concept of cottage villages where it's kind of a neat step from, let's say that, you have maybe the people that are buying these are first-time home buyers or people that are downsizing. And, instead of going and renting an apartment or living in an apartment community, they can go out and own a home but still have that community like an apartment, but you have more privacy and more community than you do or more privacy than you do in an apartment community, and you have ownership. But you still have the community that you have where you have some of these nice apartment complexes have those amenities. Okay, I'm going to go back into deal list here. See if there's anything else I want to share on this deal. So yeah, so the pro forma snapshot. So this is a picture of just what the cottages could look like. This is about roughly what size they could be. I think I have them drawn out as 30 feet deep and then between 16 and 20 feet wide, which is perfect for cottages. And that's actually a fairly standard size even that you see on 2-story, at least width wise, 2-story homes that you see on these narrow lots, on these narrow lots, like on older parts of town, like the Bench and the North End, Southeast Boise, that kind of thing. So this is could be a pretty great product for this set. So again, the purchase price is 550,000. We're assuming doing the 40% down here. But I think we could get different lending for less money down originally out of pocket. Now you might still have to do a little bit more out of pocket later on once the development starts to make sure the ratios look good for the lender. But we'll underwrite that further too, depending on what your situation is. Then we have the entitlement cost. This is basically to get the unit approved, the subdivision approved, or not even the subdivision, the cottage village approved. That covers all of our fees and all the engineering costs and everything. And then we have your horizontal, putting all the infrastructure into it. This includes any kind of finance costs. And then same thing with the vertical. This is to build all the units. Now, again, on the building, we're probably not going to build all of these all at one time. We would look at what the absorption rate is at the beginning before we build, and not build probably anything more than like a 4-month supply. So we don't want to build all 15 and then have them sit there for months or a year or longer. We're going to build them so that they get sold basically as soon as they get built. And then your total cash investment, making all those assumptions, and then your return, that's if you sell all of them. And then if you keep all or one of them, you get your cash back plus your 243,000 plus a free cottage. This is your profit. So you get your 330,000 back, plus you make 610,000 on this deal. So your overall ROI is 185%. I mean, these are crazy numbers, honestly. Um, you know, most people, they're happy to see, anywhere from 15 to 20% on deals, particularly like syndications. Some of the really good deals do really well and do like 22, 24%. These are funny numbers right here. And we're doing these deals because ultimately, like, we benefit from this as well. So obviously my company is profiting. But really, if we can do more deals for other people, we're also, my company is also profiting. But if we're able to help more investors, it's kind of a win-win for everybody. This is West Bench neighborhood. It's about just shy of an acre, zoned R1C. And by the way, so this pro forma snapshot we send out to anybody on the mail list. So you'll get this weekly, usually about noon. And then because it's not a subdivision, it's a quicker turnaround. So like I mentioned before, we can do the horizontal and the vertical at the same time. Okay, and then just looking at the overhead here. So this is the lot. So there's already development surrounding it. This is Goddard Road, Maple Grove, and then this actually turns eventually into going uh, down the hill into Garden City. So, yeah, pretty near where all the other development is happening in Garden City as well. So, and you're also just a couple blocks away from this nature reserve right here. So that's also a cool location. In fact, funny story, my very first new construction house I built just a couple blocks away, right here, this little skinny lot on Midland Road was my very first new construction house back in 2021. Okay, we're gonna jump into some of the couple other deals. So this deal in Garden City. So I had a friend reach out to me. One of her friends is a part owner on this property. So it's currently on the market. I thought this was going to go under contract last weekend, either with one of our people or they actually have an LOI on the deal. It sounds like they're not going to accept it right now, which means we have some time to slide in here. But this project has some great profitability. I'm not going to go really in depth on this because I did it last week. So if you want to see more details on this, I did cover it in depth last week. But it has a stellar ROI on it. Pretty great location. It's kind of let's see, east of Veterans Memorial. So just a couple blocks away from, in fact, let me pull this up, sorry. This deal right here. So this is 40th Street. This is Adams right here. So there's already developments happening, over here. This is a newer cottage development that was a few years ago. And then there's some new developments going on currently. These were just built out. This one is for sale, but it's entitled. These are relatively new. So just a couple blocks away from all that. Then you also have just a couple block access to the green belt right here and the river. And then Whitewater Park is literally just, this is probably less than a half mile away. I don't know the exact distance on this, but it's probably a quarter mile away-ish to right here. So just a few blocks. What's also kind of cool is, so right here is the ACHD site that is actually, they're vacating this, I think next year. And this is all going to get redeveloped. So really, really cool. It's just going to be an extension of this Whitewater Park area where you have all those really cool, you have the Whitewater Waves, have some really cool developments going on over here. But this is all extending westward, all the way to the new park, that 80-acre park at Expo Idaho. But overall, great location and still a great price on this land, and we can turn it into something really special. And can make almost $800,000 by doing it. This one, again, we underwrote it with the 40% down. Ideally, if you're going to buy something like this, ideally you actually just buy the land cash, but you can actually finance it. This is factoring in your interest payments as well over the time. But that all looks really good. And then another deal we presented last week as our deal of the week was this deal on 39th Street. So what's kind of unique about this one, we have a client that bought the property right across the street, and we're currently going through entitlements. So that's this property. So this is actually just a block over from the one I just showed you, even closer to the Whitewater Park area. But this parcel is actually this highlighted blue one, and then this parcel as well. And then our client owns this parcel. So what we could do with this property, we could actually develop these two together, but not just these two. We think this gentleman also would sell or partner, and we could actually turn this into a bigger development. I'm going to show you the layout I have for this if we did it as a bigger development. And then also would be cool to incorporate this property as well. And so I have a site plan that incorporates this, but it actually wouldn't necessarily be necessary to incorporate this one. If they wanted to, that'd be great. Eventually it would get developed. And I think, the way I have it set up, I think they would be pretty motivated to either sell it or partner in on it and do kind of a conglomerate. I'm going to stop my share on this one and show you the site plan that I have planned for this, if we can get all of them together. So that's this property right here. So this is that parcel. We could basically turn this into, we would vacate this Xenia Street and turn it into a private street and just turn it into like a big circular drive. And then all the garages would have access to that street. And then everything would be inward facing with the sidewalks and everything. But this is maximizing density. And the nice thing when you develop all this at the same time too, is that you get some economies of scale, both in some of the density limits, or like for parking, for example. So if you developed all four of these parcels separately, you'd end up having to add a lot more guest parking. But when you develop them all at the same time, you meet that minimum threshold at first, and then after you meet that minimum threshold, your guest parking per unit goes way down. So we end up having probably 5 less guest parking spaces than we would need if we developed them all separately, which ultimately takes up 2 or 3 spaces for units that we don't need to do. So we're able to maximize the density here. And then also just kind of maximize the layout. There's a canal right here, so we actually have this meets open space requirements for a sidewalk along a canal. So it could actually incorporate the canal along with that too. We could landscape it nice and have it kind of like a cool little park-like setting. But yeah, just turn it into a really cool development. We'd have 6 townhomes in the back on that little parcel I showed you just a second ago. And then I think 8 units on the parcel that our client already has, and then another 7 or 8 on the front parcel, and then 9 over here. So turns into 31 different units with mostly townhomes. We have a couple detached units there. Ultimately maximizing the profitability for all the people combined. But currently this property is for sale. So somebody could buy that and kind of maximize this. And then ideally we can get these 2 properties under contract or get them to partner as well. So I'm currently working on that. I've reached out to these 2 owners on the property that's on the market, and then the one up front that I mentioned. And then I'm just going to get back into the list here again and finish up with a couple other deals that are still on the market. So we have, let's see, not really any other oh yeah, we do have this subdivision on the market still. This house price is a little bit, it's probably still overpriced a little bit, or it has been overpriced. They've reduced the price quite a bit since they originally listed this. But this one also sits on about an acre, and we could add actually about 5 or add 5 kind of luxury homes here. The location where this is at would bode well for doing some upper level homes here. Not high-end homes, but just like larger and nicer finishes. And your profit per unit is actually really good. Just when you buy this original house, and the original house does need, it just needs like basically there's some wallpaper and outdated paint, so it just needs paint and flooring basically throughout. Aside from that, it looks pretty good. But then you have some losses on the original house just for the carrying costs for going through the entitlements and everything. But this one again could be a cool development as well. And then there's, I don't know if there's any single family. Oh yeah. There's this one on Hillside, again, a little bit higher purchase price. This is actually a pretty nice house, but we can actually split two lots off. And again, just the location on this. This is on Collister Drive, so it's right at the base of where those Polecat Gulch is. So again, we can have some higher end homes there. We can split two lots off of that. Your profit per house looks pretty stellar there. And then again, if somebody wanted to live in this house, a little bit less money out of pocket to buy it, and then you're also have a little bit higher profit. Now we don't factor in your house payment in that because it's ultimately if you're going to live there, we're not factoring that into the investment numbers. Or if you just want to buy it as a investment, that also has some pretty good profit there for a single house. Now, what I will say with the nice thing about something like this is it's a two lot split, so you don't have a ton of infrastructure costs. There's minimal out of pocket costs after you get your down payment and pay for entitlements. And a lot of times those infrastructure costs can be rolled into the construction loan because they're pretty minimal anyway. But the benefit to something like this is you can buy the original house like you would on any other normal house. So you can either use it as an investment property loan and get the investment property loan on it, or as a live-in unit. Versus like some of these land deals, you have to basically buy them cash or buy them with a lot more cash leverage out of pocket. So on these where there's already an existing house, there's a lot more finance options with it. So you can limit your cash out of pocket. So if you're working with not $500,000 or whatever that some of these deals require. Some of these single splits you can do a little bit better. The ones, we occasionally come across more of these, like this one on Virginia Avenue where it's lower purchase price. This is actually pretty great still for return for, if you have 150,000. And some of these deals end up still being six figures. Just depends on the part of town, but again, this is these single lot splits. They're harder to come by. When we do find them, they usually sell pretty quickly. But we'll have more of those coming up as well. So anyway, thanks for tuning in, and that's it for this week's Find Your Next Six-Figure Infill deal. We'll be back next week with the deal of the week. And if you are interested in any of these, or you have any just additional questions or want more information on anything or even our system, just feel free to reach out to us.